Welcome them all. Veronica, at the end, Veronica Bolton-Smith, Contact Africa Network. Neil Herbert, Atlantic Lithium. Next is Oliver Richards, UK Government, Department Business and Trade. Then Andrew Young, HPX Mines. And finally, John Hodder, who is the Tembo Capital partner from Australia. So, for those of us who are anoraks in the mining industry, we've been living and breathing critical minerals for the last 3 years. But we do realize that this is a much broader conference. So the first question, or the first comments we wanted to make is, what is driving the heightened focus on critical minerals supply chains, and why is Africa key to any global conversations in critical minerals? So Veronica has an incredibly unique experience, having worked for the UK government, plus the private sector investing into Africa, and recently advising African governments, particularly Ghana, on attracting foreign direct investment. So she is well placed to inform us on this question.
Thank you, Fiona, and a pleasure to be here. So let's answer the first question. The second question first, perhaps, is why Africa? And I think it's a no-brainer. Africa holds a large percentage of the world's critical minerals, 50% of magnesium, 50% of cobalt, and looking at about 6% of copper. So it's critical that Africa is part of the conversation when it comes to how to extract. And I think what is coming out in kind of global dialogues now is why Africa needs a seat at the table when we're talking about extracting of the raw materials and then turning that into manufacturing and processing on the continent. There is a race for critical minerals, geopolitics has a large part to play in why Africa really needs to start creating robust strategies and frameworks around how to extract the raw material and how to gain value addition out of it. China has an interest. It holds 90% of the world's processing of critical minerals. And so the question is, how can countries and regions shore up that critical mineral value chain and access to the minerals, for the future? And I think the US has noted China's protectionist policies. We saw earlier last year, graphite was being, the protectionism around that. And also just generally, the fact that a lot of nations haven't got access to processing rights, and to build that will take some time. So I think, it's important that Africa doesn't repeat history. We don't want to see what happened with oil and gas and gold and diamonds. We don't want to see that happening again. And so for me personally, I've launched something called the Critical Minerals Africa Group, a platform really to highlight the need for Africa to have a seat at the table in international dialogues, and also for public sector to engage with private sector, because I often see a disconnect in that when I'm sort of dealing with investors, and the need for both to work in tandem, and also for us to start looking at regional blocks and how to kind of increase value chain addition across regional blocks as opposed to in countries. I can go on, but I'll leave it there.
The problem is, when I spoke to individual panelists ahead of this, I thought each of them could have held the whole panel themselves. There's so much wealth. So I'm afraid I'm going to have to move on, but absolutely, you could go on. And Veronica, you have so much to add. But may we give everybody a chance?
Yes, of course. Yeah, sorry. Just the Ronnie show.
In my long involvement in the mining sector, over 30 years, I've never seen governments involved as extensively and vocally as they are now. What is more important in driving solutions to the supply chain issues, public or private capital? So we have representatives from both here today. So let's start with a private capital investor, John Hodder, Australian arm of private equity firm Tembo Capital. John, are there specific issues, challenges around private capital investment in critical minerals? and where could public stroke government capital work most effectively alongside private capital?
Great question, yeah. If you look, critical minerals covers a lot of space, for example, copper. But the copper industry is well established and really quite strong worldwide. There's, Rio, BHP. But what we are seeing is, with the US and a number of other governments, they're trying to compensate the value chain that China has created over the last 15 to 20 years to ensure that other more critical minerals, think rare earths, lithium, these smaller things, that it's not completely controlled the market by them. So if we were to excuse the top end of town, and look at, to some degree, how a Tembo would look at critical minerals, because our biggest investment is in copper over our 3 funds, so we don't really, it's critical, but we see that as a very much down the fairway mining type investment. But the issue with the governments wanting to spend a lot of money and come into the mining sector, to use a lovely quote, the road to hell is always paved with good intentions. And the good intentions are that we will fund lots of different companies to build, graphite, or build a rare earth project, or build this. And I'm not sure that that's the best use of government money. I think there's private sector that are willing to take that investment, not necessarily a lot of them, but I think where the government could really wrap itself around, and in Australia we've got NAIF, the North Australian Infrastructure Fund, but I have worked a lot in Africa, where the government really, I think, could play a very enhancive role is in giving insurance, or, there's the original MEGA, but if we were to look just, for example, at rare earths, Xi Jinping or whatever said, the Saudis might have the oil, but we've got the rare earths. And he said that back in the 1980s, when most people couldn't even remember what rare earths were unless you went back to your, studying chemistry at the time. And now they dominate it, and we see these projects get up, and then all of a sudden in the West, the rare earth price collapse, a bit like the lithium price. And I think people are very nervous, especially the commercial banking area, because of the volatility, the opaqueness of these markets. And it's not really, the hard bit isn't digging it out of the ground and processing it. The hard bit is it's different to a lot of other commodities. You're relying on really strong relationships with your off-takers. Will the off-take agreements see you through thick and thin? It's a different relationship to just producing iron ore, gold, or whatever, putting it on a ship, putting it into a big terminal market. And this is where I think, and I've said this to NAIF previously, if you can look at some sort of insurance policy or an ability for you to warehouse critical minerals so that the banks will not have to foreclose on their loans if there's real volatility in that price, then I think that's a far better and hopefully less expensive use of taxpayers' money to see a great result, i.e. these projects get developed with hopefully as minimal interference because there's always consequences to as decision making, and we're almost looking at sort of going back to having strategic stockpiles. If the price is really low, can we survive in that environment? And it's difficult, So I think that's.
Absolutely.
I hope that's an answer.
No, very good point.
Yeah.
A bit like the Oppenheimers did with the diamonds, really. Yes. Great. So before we move on to Oliver, who is going to say how the UK government is going to react to all this, Neil Herbert, as CEO of a junior miner developing a lithium deposit in Ghana. What's your view on public versus private capital? And given, so here we get into a bit of the hairiness of the elephant in the room, the China story. Given the growing geopolitical tensions between China and the rest of the world around the supply chains of critical minerals, could there be consequences for accepting Chinese capital in terms of tariff sanctions in the future?
I suppose it's possible. It's a good question. Ultimately, I think as mines, we don't tend to benefit directly from Chinese capital. So in the case of the lithium project that we have, and we're going to development stage now, we have different partners. So the first is actually is government capital. So the Sovereign Wealth Fund of Ghana is investing directly in us, which is, I think, a bit of a pioneer in Africa in terms of what they're doing. So they've already invested into the top curve of the company, but they're also looking to invest into the project itself. But the point made earlier regarding offtake is key. So where we look for the majority of the financing is related to the offtake. So we have a US partner, and that US partner is a private company. It's a listed company, but it's not controlled by the state. And that provides most of the financing for the project, but is also taking 50% of the offtake. And they may be benefiting from policies in the US because they're looking to create chemical conversion facilities in the US. So they actually benefit from incentives from the US government. And we have a balancing financing requirement, which at this moment in time will probably come from China, and we'll send our product to China. Those, again, are private organizations that are listed. It's not public money, but those companies have benefited from policies in China which have encouraged them to develop, and indeed relatively inexpensive capital available to them so that they could create these conversion facilities in China. Yeah. And there is certainly a competition on, and in respect of lithium, certainly the Chinese are well ahead in terms of actually creating a sector which is dominating the downstream conversion. But those companies in China are very much looking to secure the mineral that they require for those plants by direct investment.
Yeah. And I think you mentioned where governments are important, like in Ghana, is because mining projects are always a bit sensitive with the communities. So the Ghanaians have a stake?
Yes, so Ghana benefits in different ways, and obviously beyond the usual taxation. At the community level, we actually had tremendous support. One of the chief advocates for the group for what we're doing for the mine build is actually our local communities. They've actually lobbied government to see the mine put in development. We actually received our mine operating permit today, but last month the Paramount Chiefs were actually at Parliament lobbying on our behalf to get those permits so we can start production. So we actually have a community development fund, which is 1% of revenue, which is, I think, the highest has ever been in Ghana. So that's a very important part of the support that we have. Obviously, we pay taxation, and beyond that, the government stake in the project is a free carried stake beyond the Sovereign Wealth Fund is 13%. So Ghana is a relatively sophisticated mining jurisdiction. It's been a mining jurisdiction for over 100 years with many operating mines already.
Yeah, great. So moving from the private sector to the public sector, Oliver Richards. Critical Minerals, Department of Business Development. How does the UK government see its role in securing critical minerals supply chains in the light of a little bit that we've heard, but also in the context of, may I say it, a minnow in a very big sea?
Yeah, I mean, it's another great question. I mean, I think for us, we've been looking at this for 2 or 3 years. We had our strategy in place since 2022. For us, the context is is quite different to a number of different countries. So we're not a big producer of critical minerals. There is some potential in that space, but we're never going to be huge. So for us, a lot of it's about really collaboration and working with partners. You know, at the same kind of level, we don't sort of have the same incentives packages as the US in many different ways, but actually I think that helps us because, you know, there's an opportunity for us to work towards more creative solutions. So I think in terms of our strategy, and this of course is all under development with the new government, but we're looking very much at how can we support supply for our domestic industry, and you'll hear more about that next week at another investment summit, which I won't mention here. But you know, in essence, it's about how do you support the auto industry in the UK, which is worth $100 billion, for example. That's pretty important to this economy. What are the raw materials that they need as inputs for that, and how can we support those companies to get them? I think then in terms of the international collaboration piece, there are four like the Mineral Security Partnership.
Yeah, could you just expand a little bit on that?
Yeah, so that's so the group of kind of 14 core members, G7 plus others largely, and then a forum which encompasses about the same number of producer countries, and it's beginning to take shape as a framework in which investors, public and private, can look at projects and find opportunities to invest in them with the broader support of that group behind it. So for UK, we have a couple of projects on that list, and we found some quite interesting collaborations, both in terms of what's going on at the UK end in terms of innovation, which is quite interesting, and how to get more money into that, but also then how to link that up to the raw materials in producer countries and get funding into that as well, so the two things can come together. So we try and look at the whole value chain in that area.
So that would be including Canada, Australia.
Yeah, I think so. So a lot of different approaches.
Yeah.
So Canada and Australia, I mean, let's be quite honest, are trying to sell their minerals to the rest of the world. So that's one angle. Then in other cases, you know, there's kind of questions about how we engage in terms of trade relationships. So think about the EU, for example, and the Critical Raw Materials Act they have and how the UK should interact with that. Think about the US and the Inflation Reduction Act and what kind of partnership the UK should have with the US. So thinking about our key partners in that way, but also then thinking about partners, say, in Africa, and how in particular, you know, given our strong relationships with Africa, we can play a role in helping some of these projects develop.
So just before I leave you, because the UK doesn't have the financial muscle that the US is throwing at all these critical minerals through the IRA, there have been suggestions that you will play to the UK's strengths in softer links and ways.
Yeah, I mean, I think it's a bit of both. I mean, there are some financial instruments that we have, export credits and BII in terms of not necessarily mine finance, but development finance in the broader infrastructure around mining. But then also, I think what I've seen is a lot of innovation in UK universities coming out in terms of how to process materials more efficiently, and you know, that plays in, I think, to desire in Africa to go up the value chain as well. And I think when you can find the right sweet spot between what's in it for UK and what's in it for African nations, you're in quite a good place to try and forge those partnerships. And of course, because historically we've been very close to many governments across Africa, we can support those, I think, in quite powerful ways.
And the research at universities. Yes, yeah.
Yeah, I mean, some of us mentioned rare earths, but there's some super interesting stuff in terms of how to process rare earths and recycle them more efficiently, more energy efficiently. You know, those kind of technologies which are now being scaled up and commercialized in the UK offer a lot of potential, I think, then to make those connections with partners in Africa that might be producing the raw materials, that might want to actually, with time, develop their own processing around that as well.
Yeah. So that moves enormously smoothly on to Andrew Young, who is XPH Mines, a private company backed by Robert Friedland, whose vision on the energy transition involves, in my view, not only mining the critical minerals required, but also developing new technologies. The point that he's made, that use less energy in the mining and processing of these minerals. So, Andrew, as a US-based company, do you see the critical minerals debate shifting dramatically depending on the outcome of this hugely binary election coming up?
Not at all. And the reason is because, I mean, critical minerals now is, yes, you've got, your minerals like copper, which demand supply. It still follows that to a degree. But you're seeing, if you look at some of the minerals right at the top of the list, there's some quite unique minerals, such as scandium is a good example. So scandium is, from a pure metal perspective, is 100% produced in China. And now that is 100% used only in the US. Now that is used in sort of chips for sort of Wi-Fi and mobile phones, and it's really an enabler for sort of 5G and 6G technology, to sort of in terms of the discrepancies between the signal, the RF signals, and basically clearer signals, and that's key for sort of when you think about drones, when you think about missiles, and that all feeds into US national security. So that is what is driving some of these critical minerals right at the top of the list today. Demand and supply, you can throw it out the window. So it's, and that's why I think Trump, Harris, it doesn't really matter. It's not going to change sort of the momentum in terms of in the space.
Yeah, and I think when we chatted, you had quite a strong positive view on the way Africa is developing some infrastructural clusters. Do you want to talk about that?
So we're developing an iron ore mine in Guinea, which we just announced something called the Liberty Corridor, which basically it's an infrastructure corridor linking our mine in sort of the southeast corner of Guinea through Liberia to the coast. Now that corridor it's a brand new railway line, road. It brings in hydroelectric power from Côte d'Ivoire over the border, high speed internet, and this is all about regional development. This is an area where there really is not much going on in terms of economic sort of growth, and sort of it's an area it is very poor, and what we've got planned there is something called the Lola Processing Hub, where we can aggregate, bring together other iron ore deposits and upgrade that material, beneficiate the material. And that speaks to the value add that the African governments want to see in country now. Like in Guinea, I mean, if you look at sort of, say, the bauxite industry over the last 10 years, the growth is fourfold. 10 years ago, it was producing about 30 million tons a year. Today, it's the largest exporter in the world, 120 million tons a year. And the skill base has grown alongside that, and now you've got a highly skilled workforce, and the government is very much pushing, 90-95% of the workforce needs to be Ghanaians, very few expats. So that's driving, I think, and I think this is happening across Africa. I mean, you mentioned sort of those regional hubs, but it's happening all over, and it's why. You look at, there's so many countries now that are off limits. Russia, China, South America have got its challenges with, building mines up in the Andes at 15,000 feet. Africa is, it is, I hate to say it, the last frontier and an opportunity, and I think it's well placed. And the risk reward, you've got some of the highest grades. I mean, our iron ore is 68% Fe. Sure, you can find other examples, but it's hard to find.
Yeah, to produce green steel, yes. So I don't want to become an advocate for Robert Friedland, heaven forbid, because he does a good enough job at promoting himself. But you said this could become Ivanhoe 3, so you are positive on the opportunities for critical minerals on the African continent,
Yeah.
investing further than, yes.
Of course. I mean, you could. I mean, Robert's got Ivanhoe Mines in the DRC, which is just, and talking about infrastructure in the DRC, I mean, they've just, the Lobito Corridor, which is a response to, the China One Belt initiative, and now, we've announced this Liberty Corridor. Again, it's, you control infrastructure, you control access to commodities. It's,
So thank you. We've talked about the UK government as opposed to private capital, and now may we circle back to the African governments, and clearly they have read the tea leaves, seen how important critical minerals are to the West, and looking for a final opportunity now to benefit their own countries from the resources, the critical minerals resources. So may I ask each of you to say, what would you like to see from African governments that would really be positive for flows of investment funds into Africa? Because this is the real opportunity. And I think, firstly, I'd like to ask Veronica, because she has been working on a very interesting project in Ghana, but then I'd like to ask John, because he's also had very good experience and has some interesting views on not killing the golden goose. So Veronica, tell us about your experience in working with the Ghanaian government in attracting FDI, and what you think African governments should be offering to investors.
Thank you, Fiona. So another hat I wear has been to consult for the UK government on a programme in Ghana called the Ghana JET programme, Jobs for Economic Transformation. I'm sure my friend from Atlantic Lithium might know a little bit about it. It's really to support Ghana's mandate to move away from aid to trade, and how we can spur investment into 3 core sectors: automotive, pharmaceuticals, and textile and garments. Automotive of the 3 has done the best. In 3 years, we've drafted policy with the Ministry of Trade and Industry. It went through Parliament in record time, so 3 months, faster than most countries, particularly this one. And I'm pleased to say that the auto policy was launched, and as a result of that, Ghana's gone from 0 OEMs 3 years ago to now 12. So we have Suzuki, Toyota, Volkswagen being the first to come in. And then the work that we've done with the government has been to look at how we can attract big ticket anchor investors as a result of the policies that were drafted and the incentive framework that was also enshrined in law. Unfortunately, the other 2 sectors weren't as lucky, because due to the IMF bailout, we weren't able to secure those incentives. But on the auto side, we've seen such interest, and obviously we've got assembly plants being, appearing all over Ghana, and we brought some component manufacturers in January to meet the Vice President, and I also personally invited a processor of lithium, as well as a battery manufacturer. So we were looking at how we can really secure that value chain from the processing of the extraction of lithium, processing, and then into electric vehicle battery manufacturing. And I'm also, quite interestingly, was sat in a meeting with a multilateral who was really trying to push hard for us to encourage the Ghanaian government to implement a purchase of electric vehicles. And I had to remind them that, 1 out of 3 people outside of Ghana don't have access to electricity. So what good would it be to have people purchasing electric vehicles? And which they sort of said, oh, yes, actually, that's a good point. So then we started talking about how can we manufacture electric vehicle batteries, which is, and now the conversation is looking at the WTO, looking at how those electric vehicle batteries could be exported to the US duty-free. So it's a really positive story about how, we've worked very closely with the government, and, anyone can attract investors. You can invite them to come and look at, industrial sites and so on. But actually the groundwork really needs to be done in terms of drafting policy that gives assurances to investors, and shows commitment from government as well. And I'll just lastly say that we then linked what we had done with Ghana in with the African Continental Free Trade Secretariat as well, so that we didn't end up cannibalizing what our neighbors in Nigeria or elsewhere might be trying to do on the auto space. So they've taken the policy that we drafted and now complementing, you know, other markets looking at things like buses, manufacturing buses or two-wheelers, etc. And you asked another question, which was why? What was it? Sorry, just remind me.
What would you be advising governments
To focus on.
to attract FDI? Yes.
So yes, certainly policy I think is key. But I've got a whole long list of things government needs to do. But I think I'll keep it short. The key thing for me is, which is unusual, the key thing for me is to make sure that we look at how we're going to meet the demand that's coming. We've got a population boom on the horizon. 1 out of 6 people are going to live on the continent of Africa. A huge percentage of those will be under 18. So we really need to think fast, and we need to think strategically around how we're going to utilize these critical minerals, how can we create jobs out of it, and how can we bring that value back to the continent. So that would be my key, is looking at capacity building and job creation, number one.
The whole supply chain.
Absolutely.
Great, yes. John, you had some interesting comments on operating Africa. You said you'd been successful, but you had one bit of advice.
Yeah, I suppose I was 8 years with CDC, so
yes.
we were helping assist the private sector throughout Africa. I think the issue mining is you just can't pick up your mine and move it to a new jurisdiction because of certain issues. So. And the investments are really upfront and often quite significant. So the more enabling a government can be from the get-go, the more that legislation or those initial agreements are then followed through by the government, the more stable the country becomes, because people see it as a place where long-term capital can be attracted and not compromised. And so, sometimes it's not as easy because often, how would you say it? Oil and gas is quite a different industry. They pay usually far more revenue, for example. And it's not particularly obvious to people who haven't been in the mining industry or raised with it just how long some of the paybacks are for some of these very, very large capital intensive. And you've always got the issue because, most countries in Africa are democracies and they've got people who vote. There's always that issue about killing the goose with the golden egg and trying to extract, more royalties several years after it's been built. Those kind of issues. So. And generally, most industry players, I can't say everyone, but I would say most industry players actually see the benefits of having the government aligned, as you say, some sort of equity participation, even better if that is a contributing equity participation up front. But if you're looking for a free carry and you're looking for X, Y, Z, the project, if it's robust enough, will be able to carry that, but as long as it's not excessive, and people can see the benefits both to, the long-term investor, because they've got to make a return on capital, and that will encourage, I think, and you've seen it quite clearly in places like Ghana, encourages a vibrant mining sector for years, because people are willing to take that risk, A geologist I was. I mean, there's no doubt that the geology of Africa not only is outstanding for a whole host of critical minerals, but it's very, very underexplored compared to Australia, Canada, North America. So the industry will turn up, and if the fiscal package is right.
So put a number on that. Free carry, what is?
Oh, I think mine, 10%, 12.5%, but wanting considerably north of that it becomes a big burden for the project to carry.
Great.
Maybe a 10% free carry with a 1 or 2% royalty.
Yeah, great.
It varies. So.
Thank you. Yeah.
Okay.
So the two other operators in Africa, Neil, let's start with you. What would you like to see from African governments to
I would echo John's comments there. What we really want to see is consistency and continuity in policy. So radical changes in policy will discourage investment always. And stability in licensing as well, which is one of these issues, which is always out there in the mining industry, is that now you have it, now you don't. Not necessarily a problem in Ghana, for example, but there are concerns in Burkina Faso and Mali today. But we all expect policy to evolve, and obviously, but not huge changes overnight.
Overnight, yeah. Andrew?
Yeah, I mean, I'd echo those comments on political stability. I mean, in Guinea, we have a self-appointed president right now, and we need an orderly transition to some democratic elections. I think the other things that probably jumped to mind for me is corruption. Like, it's still, I mean, it's not across Africa, but
Infrastructure, did you say?
no, corruption.
Corruption,
Yeah.
Yes.
It's still a problem, and more of an effort needs to be put into to clean that up. And then lastly, I'd say sort of just the continued upskilling of the workforce. I think it's come a long way, but it can go a lot further. And I'm talking about sort of, when you're dealing at sort of government level with agreements and things, you can see sort of at that government level that perhaps the knowledge isn't quite there or the experience yet. So I'd like to see more of that.
Yes. Capacity building, is it? Yeah. And power and water. I mean, it's not only up north in Africa, as we know, it's South Africa. Power and water, yes. You like, obviously, that would be good.
Yeah, I mean, I think access to power and water, it's not first on my mind because the project we have doesn't really have any problems on that front. It's a low power requirement and we don't really use much water either. But as you say, there are other projects in Africa where water and power are key. But there's been a lot of innovation, particularly on the power side, with solar coming into the formula, which I think has been a huge improvement. But in Ghana itself, it's not really an issue.
Yeah, no, that is becoming, yes. So I'm sure we are getting to the end of time. I haven't got a watch on. But may I ask, just from each of you, because you have such a wealth of knowledge, 10 years on, where do you think this debate on critical minerals, the West, China, Africa, where do you think 10 years on we will be on this debate? Starting with you, Oliver.
Wow.
Tariffs. Sorry, we didn't bring in tariffs, but yes.
Tariffs is an interesting one for us. I mean, maybe just comment on that because, yes, I mean, I think the UK is quite an open economy, right? So, again, back to the auto industry, actually half of that turnover is exported out of the UK. And so by definition, we've got a different approach perhaps than others on tariffs, and I think that speaks to our kind of free trade history. But you'll hear, loads of commentators' different views on this, but many of them say tariffs are not the solution to things. I think if you look 10 years on, nothing will be the same because that's the nature of things, and everything will be the same at the same time because that's also the nature of things, I suspect. But some of the things I expect to have moved on would be around recycling, for example. There'll be a lot more metals in our economies, and we'll be much better at extracting them ourselves. So actually, I think in terms of the mining cycle, and there are miners on this panel that talk to this, but now's a good moment to actually do the mining because from a consumer country point of view, as the UK will be looking to balance that with substitution and reuse of materials in the products that we produce.
The closed economy, yes, okay. Processing, do you think, let's say, Andrew, do you think processing will have moved to Africa?
Yeah, that's certainly our goal. I think it's a huge opportunity. I mean, you've got the best iron ore in the world, and so why shouldn't the processing be there as well? Whether that will happen in 10 years, we'd like to make some good progress. So, I mean, I guess what concerns me a little bit is, the world's a dangerous place, and it is a bit of a race to secure these critical minerals, and we need to have made some serious progress in 10 years, because it can take easily 10 years to get a mine into production. So.
yes, and your new technologies that you're bringing, yes. Neil, where are we going to be in 10 years' time in this debate?
I think in terms of the US and China, looking beyond that, we have a fundamental change coming in what we're doing with electrification. So Africa has a key role to play because it has the minerals, but it also has the desire to exploit them. So I think we'll see China playing a very important role, the US playing an important role, but Africa in itself would be playing a huge role. And in terms of the development of processing facilities in Africa, you already see that, and certainly talking to some of the Chinese companies recently, very actively, one of them actually announced that they're building a processing facility in Morocco. We don't necessarily consider it to be Africa sometimes, but it is in Africa. And we'll see a lot more of that, and part of that is I think that the need to take advantage of where the minerals are, but also to avoid some of these issues regarding trade barriers.
Yeah, absolutely. Yeah. Very good point, yeah. So Veronica is an advocate and has established an organization that is...
Critical Minerals Africa Group.
Yes, so tell us about that.
Well, everyone join, number one. It's there really because I just lacked seeing in the market any voice, industry voice, really talking about how Africa can benefit from the critical minerals that it possesses. And frankly, I was getting a bit frustrated and sick and tired of it because, you know, often I'd be the only voice in the room that would be talking and presenting Africa's point of view on this. But equally well, I think it's down to our leaders. We definitely need African leaders to sing from the same hymn sheet. I've worked quite extensively with a couple of governments, one not to be named, but I looked at their beneficiation strategy and it was a long list, a wish list of we have lithium, we have copper, we have this. And it was basically like we want all investors to come in and explore this, as opposed to looking at what industries are at home, how can you benefit those industries, how can you reduce importation, and basically looking at how you can maybe capitalize on one or two of the critical minerals as opposed to looking at the whole suite of them. You know, first the country and then look at how you bring investors in. So it's a platform really for dialogue between public and private sector. It's there to give industry news and also to have workshops as well with government. To try and create robust strategies. Because I think when you think about Africa, it's the home of innovation. You know, we talked about M-Pesa earlier this morning. I remember when that was launched 2005, and now you can see the benefit that has had for countless sectors, such as renewable energy being one. And so for me, I think, you know, in 10 years' time, I'd like to see lots of innovation. We're looking at vertically integrated mines now. Volkswagen looking to acquire a mine in Zambia, DRC, and innovative solutions as well, looking at how to finance value chain. And I think it was launched in Unga last week or 2 weeks ago, MSP's investment into, oh gosh, I've forgotten their name now, but an American outfit, essentially mining for nickel and cobalt in East Africa. So it's the first time that they've actually invested in a value chain kind of addition as opposed to just the extractive. Yeah. So innovative solutions, innovative thinking. I'd like to see us talking more about actually Africa having more processing and manufacturing and job creation in 10 years' time.
John, 10 years' time.
For example, I definitely see, you know, a much stronger steel industry in Africa. You know, people will be taking the iron ore and no longer shipping it all the way to China. They'll be putting it into, hopefully, state-of-the-art, much smaller, not blast furnaces, but the new technology that's going to be very much driven by what we're seeing in China now. It's currently being run on gas, but it only would require hydro, you know, changing the CH4 to H2O, and you'd be developing very much a clean green steel, and you know, and then in a lot of the more exotic, much smaller critical minerals, you know, there's always that ability to potentially process them much closer to the source, especially if they've got very high-end use, chips or something that can be then flown to other markets all in and around. So I think the world will change in 10 years because it always has, but the most important thing is that you can't decarbonise, for example, 2050 and not run out of minerals. So something's got to give, right? We're going to need a lot more copper. We're going to need a lot more, and you know, Africa is the breadbasket, I think, for that.
And just to finish, I'd like to see the developments of more depth of the capital markets there. No, the LSE, Tom Atmer, they're working with different exchanges in Africa, but maybe 10 years' time they'll be raising finance there rather than London. Right, thank you.